everyone, and welcome to the Only Land Fan Show. My name is Kendall Lejeune, and our guest today is Larry White. Larry White founded LKW Consulting LLC in April 2015 after more than 14 years of fine-tuning and delivering world-class fractional CFO and accounting services. Larry is a licensed CPA whose background includes not only public accounting experience, but also hands-on CFO and controller experience for enterprises from startups to $2 billion companies, including those in real estate, sports and entertainment, hospitality, healthcare, consumer products, multi-unit retail, professional services, manufacturing, and information technology SaaS-based companies. He has always been entrepreneurial in nature and continually strives to better understand the recurring challenges CEOs and business owners face within the complexities of their finance and accounting functions. Larry, thanks so much for joining us. How are you today?
I'm great, Kendall. Thanks for having me, and great to be online with you and all of your group here.
Yeah, super excited to talk to you about today's topic. Today is a little bit different. Usually we're talking about the business of doing land deals and all of the different types of business models out there. We're talking today about a really specific topic that is so integral to the success of any business, but especially as it applies to land business, which is the financial health of these businesses and actually working on these businesses from a financial standpoint. So can you talk to us a little bit about your background and what made you start LKW Consulting?
I had been in industry and in public accounting for a really long time. And one of the things that I had found out, I'm actually very entrepreneurial, and I actually love working with startups and companies, growth companies. And what I have found is that people within their native genius, they understand what they're doing. They understand their business really well. But when it comes to understanding the health of their business and something that they may not be used to or may not be able to look at, people typically look at their financial statements as a barometer of the health of their business. And a lot of times what I've heard in the past is a lot of folks just don't understand what they're reading. Their accountant understands what they're reading. Their accountant puts things together based upon maybe what's good for them, but not based upon what's good for the reader or what's most important. It doesn't matter really what I understand. It's what the other side of the table understands. And the person running the business, their financials tell them the story directionally. Where have I been and where am I going? And I've tried to make it really easy for them to understand and go through the process and try and understand them sitting on the other side of the table that may not know what I know financially.
Yeah, that is such a really important insight because as land business owners, we typically think just do more deals, get more cash flow coming in, but that's just the very tip of the iceberg. Can you explain what are the key differences between a CPA, a controller, and CFO, and how do they work together in a business?
Sure. I've been asked all the time is doing what I've been doing because I'm a fractional CFO. And I actually have experience working with large and small companies. And doing what I do is I give folks on a part-time basis the ability and access to somebody who has worked with really big companies, but on a very short amount of hours per month, a very small continuum, but give them world-class service. And what I would tell you is I've been asked the question all the time, I have a CPA, why do I need you? And typically what I would tell them is I said, what does your CPA do for you? Because there's a difference. CPA, typically what they'll do is your outside CPA will take whatever you provide them, whether it's a shoebox full of financials, whether it's your QuickBooks outline. And what they'll do is they'll put together a tax return for you, typically a tax return that is IRS compliant and all that kind of stuff. But typically what it doesn't tell you is really what is the health of your business, because from a tax perspective, they're doing something that's easy for them so that you can remain compliant and prepare a tax return. Now, your controller can be either outsourced or in-house. And if I were to take a continuum or almost like a number line to make things really simple for people, if we've got our number line and we start in the middle with today and we say, here is everything today looking back historically, that's what the controller covers. Essentially, they take all of the historical information, they put it in a format so that you understand it, and they're monitoring not just current transactions, but history and putting it together. Somebody like a CFO who actually takes all of the current information and has the ability to look forward and strategize with you on where are we going. Basically, the controller will tell you, this is where I've been and this is where I am today. And the CFO will take that information and say, here's where we're at today, but here's what I can see based upon the trend of your business, where you've been, and what this looks like on a go forward basis. And usually the skill sets are completely different.
Yeah, that's a really important distinction. Thank you for clarifying that for us. How should a land business operator check the financial health of their business? What specific numbers should we be focusing on as land business owners?
It's really all about cash flow, right? At the end of the day, it's cash in and cash out, right? And we've got specific things that we do in accounting that we're required to do. A lot of people don't understand how to read a balance sheet. And what's really important is you may have all of your land investments on your balance sheet that don't specifically hit your profit and loss statement. Okay. And then what you've got also is you've got your profit and loss. And that's what everyone seems to look at first is what is my profit and loss? But what they'll also say is my bottom line says that I'm making $100,000, but how come my cash only went up by 25,000? What is the difference there? And typically what it is you've got items that are hitting your balance sheet, like an investment in land that may actually be an outflow of cash, but hits your balance sheet, but doesn't specifically hit your P&L. And so what I help to do is I help marry those two together so that you actually understand your cash flow and how it works together with your P&L and what is the difference there between cash and your P&L net income, because there's a difference.
Excellent. So I know that a lot of people listening to this may be thinking, like, wait a minute, Larry. I just started. I've gotten a land. I've figured out how to do land deals. I'm now doing it. I'm getting the money in, and I'm just trying to figure out what marketing I should be doing and all of this other stuff. And now you're talking about balance sheets and P&Ls. Can you talk a little bit about what are the differences between those, and what will that really look like for someone that may be just a year into their land business?
Sure. Balance sheet is typically something that doesn't last for 1 year. It's to last longer than 1 year. In the land business, it's interesting is people are flipping land or they're flipping homes or doing this, that, and the other thing. But essentially what it is, it's inventory, right? I'm holding an inventory of land or homes for future sale, but those don't specifically hit your P&L, okay, or your profit and loss statement. Your profit and loss statement, what that really means is those are items that are basically 1 year or less in duration that you can expense immediately, where something like a home, for example, is what they call a depreciable asset that you may hold for a specific amount of time, but you can't write it off all at once on your profit and loss statement. There are specific rules in terms of timing and I know everyone's heard the term depreciation. How long can I depreciate my home over? And sometimes it's 15 years. It just depends upon certain things. They don't let you take the purchase of the home and write it off all at once. And so there's these crazy accounting rules in terms of how that kind of works. So we figure out people want to pay less and less in taxes, right? And so if they could, they would say, I want to expense everything to my profit and loss statement, but the purchase of a home, for example, which is depreciable. But what's hard is land is not a depreciable asset.
Right.
And so it just sits on your balance sheet until you actually sell it. And then once you sell it, then it hits your profit and loss statement because then you sell it. But when you invest in land, it's typically on your balance sheet. It's an outflow of cash, but doesn't hit your P&L.
A very good distinction. Thank you. How important is it for land owners to be reviewing monthly bank statements and financial reports? How should land business owners really manage these types of tools, and what information can they glean from those that's actually going to move the needle in their business?
Sure. I guess it really What you really want to do is the reason why you want to look at your balance sheet is typically that's where your inventory of land sits. And so what you want to understand is here is my cash outflow that I have put out in terms of purchasing land, and what is my expectation for sales of that land, and how much cash am I going to get in going forward. So what it really is that if you can take your land inventory and then figure out going forward, what a CFO might help you do is say, all right, we've got this inventory of land. We expect to sell it over a certain period of time, and I expect to get cash in. And so here's my cash balance today. I may have spent it on land, but once I sell the land, then I'm going to get cash back in. And I figure out what did I make on the sale of that land, and if I reinvest it, how much cash do I have to reinvest it? Some may do it via mortgage and may do it with hard money lenders to do that type of thing. But all of that goes into determining what your true profit is. And you're not going to know what your true profit is on your land deals until you actually sell. And then somebody like me who can actually say, all right, here's your inventory, you're running low on cash. You may have to sell a certain amount of your deals to get cash back in so that you can reinvest back into your product, which is flipping land.
Excellent. Really good distinction. I know a lot of people talk about pipeline profit in the land business, which is essentially the profit that we expect that we're going to see once we complete certain amount of deals, right? So we would expect to see that pipeline profit be reflected on our balance sheet. Is that right?
Your pipeline profit will ultimately be on your profit and loss. And so it's also timing. You may say, you know what, I've had a certain amount of profit this year for sales of certain land. And maybe what I can do is I can put off the sale of that land. Maybe you're in December and you've got a large amount of profit, right? And you say, if I've got all this inventory of land, what is the timing that I should sell it? Maybe you sell it now, or maybe you wait a couple months till after the end of the year because you've got too much profit in your P&L that you're going to ultimately pay tax on. So that's another thing in terms of looking forward. That's what a CFO does. A CFO helps you do that forward-looking planning to determine how much tax do I want to pay and can I defer it going out further for a longer period of time.
Yeah, that's really interesting. I've had many conversations with many different land business operators, and rarely does the topic of let's wait to sell this. I can sell it now, but let's wait to sell it as part of like a tax strategy. So that's very interesting for sure. And when talking about fractional CFOs and controllers, when should a land business think about hiring a controller or a CFO? Hey, land fans! Looking for your tribe of serious land investors? Join thousands of your fellow land lovers in the Only Land Fans Facebook group. We're talking real deals, expert strategies, and game changing connections you won't find anywhere else. This isn't just another real estate group, this is the community where land investors come to level up. Join us at onlylandfansgroup.com and join the conversation today. That's onlylandfansgroup.com. See you there.
I guess the question is, I'll answer this in a different way, is what is the best use of the owner's time? Is the owner's time best suited by working on his land business or putting in administrative functions where he doesn't get the return and he may not be, not that it's not important, but how does the owner want to spend his time? Is the owner better suited for being involved in their business with purchasing land and figuring out how to turn it? What am I doing for the future? Are they out there meeting people? Are they doing specific things in terms of increasing their pipeline so that they can continue to make more deals? Or would they prefer to do bookkeeping and keeping track of their cash flow when they can hire someone at a rate that's much more advantageous for them to continue to work on their business, not in their business all the time?
Got it. So we did talk a little bit about how a CFO and controller goes way beyond just bookkeeping elements, right? And so can you talk a little bit about how does those roles of maybe hiring a fractional CFO or controller, how do those roles directly impact a business? Can you give us an example of how a land business might reap the benefits of hiring a CFO?
Sure. For example, I think is somebody that wants to grow their business. Okay. And I need capital to grow my business. How should I go about doing that? I'd like to increase my inventory of land holdings that I'd like to flip by $1 million or $2 million next year. What sort of vehicles do I need to go through? Should I find a private investor? Do I have the ability to go through a bank? Do I have enough inventory where I can actually turn that inventory, do a 1031 tax-free exchange, right? And reinvest it into something else on a tax-free basis. And so what I have once the books are correct, and what's really important is that you've got somebody who is preparing accurate books. What we can then figure out is on a forward-looking basis, what is my tax liability going to look like? And how do I plan for that? And if I want to invest in the business, how should I go about doing that? And I want to increase the cash flow of the business. What types of things do I need to do? Because one of the things that I found in any real estate business, one of the two largest expenses that you have on your P&L, marketing and payroll, right?
Yep, that's it.
And so the question is, one of the things that we can also help with is what types of investment vehicles are you utilizing on the marketing side to create the appropriate leads for you to invest in? And so every dollar that's spent, what is the expectation? What should that bring back? It's just not what they call a sunk cost, but every dime that you put into the business, whether it's a balance sheet item or a profit and loss item, should benefit the business in some way, shape, or form. So one of the things that I would help you do is, okay, where do you put your marketing dollars? Do you put them on YouTube? Do you use Facebook? What is the return on your investment? Where are you getting the most leads for your deals, and what are you closing, so that we can actually spend our marketing dollars wisely? If I've got somebody who I'm hiring to create deals for me or to find leads, or somebody who's an income producer, what am I essentially paying them in commission, and what essentially am I getting out of it? How much return am I getting on them being there? And typically, what I love to see in any sort of land business, I'm getting 3 or 4x based upon what I'm paying out. Otherwise, you're not going to be profitable.
Yeah, that's a
Everything is an investment in your bottom line. And so to be able to measure, that's something that a controller and a CFO helps you do is, what type of parameters do I put in place? How do I measure the success of my people? And some people may say to me, I've got admin people and they're not revenue producers. So how do I measure their effectiveness? And so what I would say is, how if they're effective in freeing up the revenue producers to produce more, then that's what I measure, is how much more incrementally are the revenue producers actually able to produce by putting an admin person in place to take those admin duties off of their plate. So what it ultimately does, it frees up their time to create more money for the business.
Yeah, and I love what you just said about every dollar that you put into your business should be an investment. I talk to a lot of people that sometimes say they look at marketing, for example, marketing to find deals as an expense, and this is an expense and that is an expense. But really, that marketing expense is an investment because when you're putting in, let's say, a $3,000 marketing campaign, if you're getting deals back that are, let's say you get 3 deals at $20,000 a piece. You've just spent $3,000 to essentially get $60,000 worth of pipeline profit, right? So that's a really good distinction.
And you should always think about it that way, as whatever monies I put in the business, I should be getting some sort of return out of it. And if I'm not, then I should go back and take a look at what I'm doing and what I'm spending on and put them in. Because look, we have a finite amount of time, right? And a finite amount of resources. And so what you want to do is spend money where you're going to get the greatest return, and the ability to measure that return is something that a CFO helps you do, is they help you measure the return on your investment that you're putting in. So one of the things that people obviously, another thing that I find that people do, especially on the sales and marketing, on the sale, with sales and marketing, is they group them the same. And it's a completely different skill set. Okay. And people say to me, all right, when I ask them, what is the difference between sales and marketing? Not a lot of people can answer that. What I look at is marketing brings the leads to the table. It creates lead generation. So your marketing folks should be bringing leads, and that's how they should be measured. Okay. How many leads are they, or whatever I'm doing on the marketing side, how many leads are they bringing to the table in terms of that investment? And my salespeople close them. What is the percentage of close rate that what I would have, especially on land or real estate? The marketing piece is all about lead generation. Sales is all about closing.
Yeah, that's fantastic. That's a really good nugget right there. So, when looking at the bringing in a fractional CFO versus hiring a CFO in your business, can you talk a little bit about what are the pros and cons of each? Listen up, land fans. This is huge. We're bringing you the one and only Pace Morby, star of A&E's Triple Digit Flip and the mastermind behind $450 million in real estate deals. He's coming to our virtual meetup on Thursday, December 5th to share how he's applying his creative financing genius to land deals. Head to olfmeetup.com to save your spot today. That's olfmeetup.com. This is the kind of opportunity that changes everything.
Sure. Typically, fractional CFOs spend, essentially, they charge you per hour, they charge you a flat fee. And every larger company that I've worked for, especially at this point in time, you get what you pay for. And typically, if you're going to hire a good CFO, it's 200,000 plus benefits. And that's basically what you're going to pay for a decent CFO with a CPA background who has probably 5 to 10 years worth of experience being a CFO or even being a controller that can make that leap to being a CFO. You're going to pay $200,000 plus. And typically, what you're going to do is if you take a look at that and you divide that by the number of hours per year. So let's just say, for example, with a CFO, if you've got to pay benefits and you've got to pay salary, what you're probably looking at is 25% in benefits these days. So at 200,000, you're probably looking at what, 250,000 all in for a seasoned CFO. And if you divide that by the number of standard hours in a year, which is 40 hours multiplied by 52 weeks, is 2,080 hours. And that gives you the hourly rate to bring someone in full time. Okay. Typically, CFOs only work part time. Part time fractional CFOs only work part time. And you pay them a higher hourly rate. But what's good is they may be able to teach your controller what needs to be done. And then they're even less expensive. So a good controller probably will run you 100, about 100,000, probably about half. Other than that, you're just getting a bookkeeper or somebody like that. And they're not going to be able to give you the expertise. So if you do the math for a decent controller, you're looking at probably plus 25% benefits. You're looking at probably $50 to $75 an hour for somebody full time. But somebody like me charges a bit more than that. But the thing is, I can give you what you need on a part time basis. Typically, my typical client, I tell them I do an average of 10 hours a month at about $275 an hour. Maybe at the first couple months, maybe a little bit higher. And so, what I'll tell everybody all the time is, how would you like a seasoned CFO who has worked in the capital markets, who has done mergers and acquisitions deals, who's a CPA, and I can hire you for $75,000 a year and you don't have to pay my benefits, or $60,000 a year and I don't have to pay your benefits. And I can give you all the expertise and I can teach your controller or bookkeeper. This is foundationally what you need to do to provide a story to your owner on how the business is doing. And then I pop in and out 10 to 20 hours a month to provide guidance, high level guidance that you may not need on a full time basis because smaller businesses can't afford that, but they need the higher level expertise. And so that's where kind of this business is gone is I have the ability to service a number of different businesses. I not just real estate, but I do a lot of different businesses and I take best of breed from all these different businesses and I have the ability to share it with CEOs all over the place. And so I've got now, think I'm in 11 states where I do CFO work in a couple of foreign countries and having a blast doing it. And one of the things that I love is I really enjoy when I can teach a CEO how to really understand his financial and utilize it as a tool, as a weapon to be able to make additional money. It doesn't matter whether I understand it or not. It's if I can get them to understand the nuggets that they really need. In 30 minutes to an hour, when I sit down and review their financial statements with them every month, and then we come out of it with an action plan of things that we need to do for the next month and the next month and the next month. And we're just consistent in what they do. And then after a while, they really understand what they're looking at. And when I can really help them move the needle with cash flow and making money, that's when I get really excited. I get really excited about watching others make money. And if I can help them do, that's why I do what I do for a living. It's really fun.
Yeah, that's great. I just talking about it, I see you light up, which is so cool. If someone is listening to this and they may be in the startup phase of their business. This is maybe they're in the first year, they started flipping land as maybe like a side hustle. And since they've created an entity, now they have an LLC, they're trying to circle the wagons and get some type of business traction. What order would you say they need to start building their financial team? Do you get the bookkeeper first and then do you bring on a controller, or can you hire a CFO, fractional CFO right out of the gate? What types of steps should they be taking in order to really set up a successful financial department?
A lot of it is just, it's what you can afford. You know what I mean? It's not a good thing if your business is making 50 grand a year and when you're just starting out and you've hired someone and they're on the financial side and they're taking all of your profits. That's not something that I would do. Hire a bookkeeper at least initially. One of the things that I can always help do is hire the right person. So once you get to that point and monitor what you're doing, basically almost on a retainer basis, is I can take a look at things and say, you either don't need me at this point. I would get to this point. Because what I would rather do is I'd rather get a client when they're truly in a position where not only can they afford me, but they can utilize me to take that next step in the business. Because the last thing I would want them to do is spend all of their money on a CFO and they're not ready yet. And so the best thing that I would do is, at least at the beginning, get a bookkeeper, somebody who basically understands what they're doing. They can at least give them an idea of, here's my balance sheet and here's my P&L. And if need me, maybe I can look over their shoulder for 10 hours a month, very inexpensively, and look it over and make sure that it makes sense, give them some guidance, and you're not in over your head. And at least you feel like at the beginning that we're setting this up for in the right way for growth in the future. You know,
Excellent. Yeah, really good. So we've talked a little bit about bookkeeping and accounting, which leads me to my next question.
all the
Can you
boring stuff, man. All the
all the
boring
boring
stuff.
stuff? I'll tell you, I am a visionary, and so when we start talking about data and getting into the weeds, like my brain starts to want to check out a little bit. But this is really fascinating because from a visionary standpoint, totally being able to use this information to leverage and pull the levers in your business to help you to grow. So, can you talk a little bit about the difference between financial accounting and managerial accounting?
Sure. A lot of CPAs will set things up from a financial accounting point of view because whenever you prepare a tax return, a lot of things are put together. They're not segregated into specific bytes that an owner may need to actually run the business. So there's a lot of consolidation of information that may be
Mm,
good for the CPA because you may be able to put together all these different accounts into specific buckets that's good for the CPA to prepare a tax return. But if you're not understanding the way it helps you, the levers that you need to run your business, then it's really not that good for you. It's good for the CPA,
mm,
right?
right.
Managerial, the purpose of managerial accounting is to put things together in enough detail where your financials tell a story to you on how successful you are in terms of doing what you're doing. All the financials are is they're a point in time barometer of your execution. It's like a language, it's shorthand. Okay. And you're looking at it just as a point in time, right? We have this arbitrary thing where we close the books every month or every quarter or every year. And all we're looking at it is as of that point in time to produce a statement to ultimately produce a tax return. But the way I see it, the year never ends. And so what I always take a look at is people say, I'm doing well against my 2024 budget and I'm preparing a budget and the last quarter is really, it really doesn't even matter because I'm killing what I thought I was going to do. But does that have any relevance to what you're going to do for the first quarter of the year? Because some people say, look, I don't need to look at 2025 until it hits. No, I like to look at things in a 12-month continuum. Am I making progress? I always like to look at things in a trend. Am I seeing a
Mm,
downward trend versus I may look at something from September through March, even though it's not within a specific year, there is a trend going on and we need to pay attention to it now. Otherwise, we may see a downturn later. People want to put it in this little black box, but it doesn't work that way in
mm,
terms of a specific year. The purpose of managerial accounting is to tell you a story so that you can take action in terms of what you need to do to increase your cash flow, increase your revenue, increase your profits. If it's not telling you a story and things are not sticking out like a sore thumb to you, then you're not getting adequate financial reporting to tell you what you need to do. It should be, for example, one of the things that managerial accounting teaches you is you've got everything as a percentage of revenue side by side each month in a P&L. For example,
mm.
your revenue is 100%, right? Everything is a percentage of your revenue. And say the raw numbers are meaningless and you always work from backwards and you say, how much of my revenue or my cash flow am I going to keep as a percentage? That's what's really important because that's how you measure profitability, right? And what happens if you go certain months and you say that my revenue has gone down, but my percentage of payroll or my percentage of marketing is going up? And so it tells you that I'm not as profitable and it tells you where to look. And that's where managerial accounting really helps you is people see this amount of data. Where do I look? Where do I even start? And this really helps you start. If you look at everything bottom up as a percentage of your revenue and increases or decreases in your expenses as a percentage of your revenue, that really circumvents a lot of time to help you to look to figure out what do I need to do to get more profitable.
If you're enjoying this episode of the Only Land Fans podcast, please let us know by subscribing and leaving a review. Now let's get back to the action. That is so good. That is so good. So thinking about if someone's listening to this and let's say they've been running a land business for a while and they've got it to become profitable and it's rocking and rolling for them and they're starting to think about exiting the business, right? How do I sell this business? How do I go into the next chapter, whatever I need to do by exiting this current business? What are some things that they could be doing? What are some steps that land business owners should be taking when they're starting to think about selling their business?
The biggest thing especially when someone thinks that they're ready to sell their business, is how personally are they involved in the business. And this is usually larger companies. When the ownership is not the entire business, and the business basically has a pipeline that's being created by others and not specifically them. Because essentially, when somebody is buying a business, they're buying it for the recurring cash flow of the business. This isn't specifically tied to that owner, because the last thing that somebody wants is buying a business. I'm going to buy this great business and look how much cash flow it's putting off. But if the owner walks away, the business is done.
Mm.
And so, how can we start thinking about it? It's not something that happens overnight. Is how can we start making this a self-sustaining business without supreme ownership involvement, that if they walk away, the business still stays in business. And that's what people are willing to buy. Is they say, if I put a certain amount into this business, then I can take what the owner did and I can make it even into more. And so the bottom line is, what do people usually buy? They buy a multiple, meaning a multiple of what the bottom line cash flow is. And they say, if we put in X amount into this business or we buy it for X, I expect it to have a value of X down the road because maybe I have deeper pockets than the owner does. But it's all about involvement in the business. If you are so involved in the business and you're not training others to run it as you would run it, you can hand off certain things, not just certain things, but creation of revenue to others, then somebody who's going to be selling the business is going to say this business is too tied to the owner. And maybe I'm going to have to hire the owner to maintain this. And what if the owner wants to walk away? Then the whole business goes away. People are buying cash flow. That's what they're buying.
Yeah, that's such a really cool perspective to look at. There's a lot of talk in the land industry about building out things that way the owner can step away, that way you can have a little bit more freedom of lifestyle, but it's not just about having a freedom of lifestyle, not having to work in the business. It's also about like your future exit, right? You need to be setting up these things up that way you can walk away and you can exit if you decide to exit. That's a really important point, I think.
Let me give you a really good example. As I find a lot of landowners that have been doing it and doing it successfully, they want to teach others how to do it. They get into the education business. The education business is very saleable because if you have students and then you're able to develop people who educate others, then it's not so dependent upon you. What they do is they take your model and you've got the ability to create basically distribution, what you're selling, the education piece, and then they can go out and sell for you. You don't need to be as involved in the business because you've got other people that are doing it for you, and that's sustainable. That's something that is not needed for you to be involved in the business. And let's just say you're signing people to contracts, and someone will look at it as, what is the length of a contract? The longer the length of the contract, the more valuable the business is because it's recurring cash flow. And that's what people are buying. People want to buy, they want to buy the cash flow. They want to buy the model that's been set up that can be recreated without your specific involvement.
Yeah, that's a really cool example. So, if someone's listening to this and they're saying, okay, I am so into the financial health, I need to get my business rolling, get it more on the track to being a healthier business financially. What are some key practices that land business and developers can start using right away to improve their financial health?
I guess one of the things that I would look at is creating trends in your numbers. So, for example, when you look at 1 month at a time, 1 month does not make a trend, right? And so, what you want to do is you want to see a recurring growth month after month. So, what I typically do, I have a lot of clients that use QuickBooks because it's easy to use. A lot of folks can use that. And so, what I'll take a look at, some of the things that I'll do is I'll say, let me take a look at your monthly growth over the past year. And then what I'll do is I'll put it into my own model and I'll say, all right, here's the revenue that you've got coming in. Here's the cost of your land, and here's all of your operating expenses. Everything is a percentage of revenue. And if I see growth and I see the percentage of revenue starting to increase, I know we're on the right path. But if I start seeing trends where things are going in the opposite direction, what it then tells me, and again, everything is a percentage of revenue. If it starts going in the opposite direction and I start seeing a trend 1 month, 2 months, 3 months in a row, where I see my profitability as a percentage of what I'm bringing in go down, then that leads me to an action. Maybe I've got too many people now. Maybe I'm spending too much market on my marketing. Maybe I'm spending too much of my marketing in the wrong place. Where am I getting the most return for my investment? And determining what is, if everything is working really well, how much should I be bringing in as a percentage of revenue in terms of cash flow that I get to keep? And
Mm.
what I always love to see is somewhere in the neighborhood of 20 to 40%. It just depends upon how mature your business is. But if you think about it, I'm doing $1 million in deals a year, and I'm putting $200,000 or $250,000 on my bottom line that I get to keep. And then I say to myself, I've got these fixed expenses, these fixed operating expenses. My payroll doesn't need to go up in the same direction that my revenue does. Maybe I hire one person and that can lead me to another $150,000 in revenue. And that means my profit goes up. And so the question is, how do I plan for that? And maybe if I can get it to 3 million, maybe that becomes $1 million for me. And how do I plan to get there from here? So I'm always looking at trends. I'm always looking at things every single month to see a trend, whether I'm getting better, whether I'm getting worse. And some of it is market driven. And when it's market driven, and you may have interest rates that are going up, you say, maybe I want to pull back a little bit. I want to squirrel away some cash for a rainy day. A lot of people ask me, how much operating, if everything were to go sideways, how much cash should I keep in the business? And I
Mm.
like to say I want to keep a minimum of 6 months worth of my operating cash in the business. Because typically, let's just say that your cash burn is 15,000 a month. And so basically, I want to have reserves. If I just do the simple math, I'd want to have reserves of $90,000 in cash, meaning if I didn't do another deal, I could live on this cash for 6 months, right? And I
Right.
could utilize that to pay my expenses. And the one thing that I have found is that typically, if you've got 3 months or less of cash available, you start to panic and you don't make the best decisions because all you're concerned about is getting cash in the door. And if you've got 6 months worth of emergency cash in bank every month, and that's what you should be looking at the beginning, it's almost impossible to do that. I'm saying this is more or less for a mature business, but squirrel away some cash for a rainy day because you're going to find that things start going down or you're not making as much profit or there's market conditions that are dictating what you're doing that you have nothing to do with. You're going to make a much better strategic decision knowing that you've got some time to make that decision as opposed to having to make a very difficult rash decision. And you may not make the best decision if you don't have as much cash. You may be robbing Peter to pay Paul, and it's happened to all of us. But typically, if you can have some emergency cash on hand, typically 6 months worth of cash, if you can do it, you're going to find that you make much better strategic decisions for the overall health of your business for the long haul.
That's really good advice. That's awesome. Thank you for that. So, what are the best ways to manage cash flow in a land business, especially for projects that might take a longer time to complete? So, you mentioned QuickBooks. What are some other ways that would be good to be able to manage cash flow?
Even if you had to use an Excel spreadsheet, even just initially, is use it in the checkbook method. You know what I mean? Is at least you're keeping track of here are my cash inflows from my deals, and here are my cash outflows, and here is what I'm making every month. And here's the amount of land that I have in inventory, and what can I expect to sell it for? And Maybe what you can do is you can forecast and say, look, always take a certain amount of your cash every month and don't reinvest it immediately. Keep a certain amount of for a rainy day if you can, and say, look, out of everything that I make, I'm going to try to save 5% of my cash flow every month and put it in an escrow account and forget about it, at least for a little while, because you're going to find that's going to add up over time and that'll be your savings plan.
Yeah.
Because borrowing from the bank and borrowing from investors to do deals is very expensive money these days. It's not like it used to be. You're not finding 2 or 3% bank deals. People are charging 8, 9, 10% on your money to do a deal. It's expensive money. So if you can figure out a way to do it yourself, at least from the get-go,
Yeah.
if you're a good rule of thumb is maybe you determine, look, I'm going to borrow this money at 10%, but what I figure is I'm going to make 20 to 30% on my money, then it's a wise choice to invest in that. But if you find that, look, I'm going to do a deal for 10% with someone, but I'm only going to get 3 or 4%, you're going to lose money on the deal. So you always have to analyze. You may come to a great deal all of a sudden and you say, look, I don't have the cash flow to invest in that. I'm willing to take hard money at 10% or 15% because the expectation is I'm getting this land so below market that I'm going to be able to turn it for 35, 40%, then it's worth it. And those are the types of things you need to look at.
Ah, that's great. That's really good. If someone's listening to this and they're just now, and maybe they've done a little bit of accounting, just tracking their expenses and their profits in their business, and they're looking to learn more about different types of financial management, what resources would you guide those people to? Are there any types of books or websites or YouTube channels that you think are really good resources for business owners in that position looking to learn more?
It's funny, I don't really look online for that stuff because I'd like to think that the way that I do it is the right way. There are resources all over the place to be able to do it. You can get guidance all over the place in terms of what's the appropriate profit. Everyone's got their own feeling. And what I have done is I've learned over time, just with my experience, people making the right decisions. When do they make the right decisions? Or do they have someone that they can trust that they can go to and say, does this look like a good deal? There are resources all over the place in terms of online. You can find that stuff anywhere. So the question is, when do I retain somebody? What is the right time? And because can the business afford it? And the last thing you want to do is, like I said, is you don't want to put all your money into a financial resource that's going to take all of your profit. Do it over time and do it when you can afford it. Somebody that can help you get to that next level.
For sure, for sure. So, what are some of the common financial mistakes that you see many startups make, and how can they avoid them? You talked a little bit about not having enough saved or not holding back enough operating expenses. Are there any others that you've seen that are pretty commonplace for startups?
A lot of people look at their bank statement and they think, wow, I made all this money this month. I can go out and just spend and I'm going to be in a great, but their folks have trouble looking forward and estimating what their future expenses are or what may be coming. Like I said, is people don't look at the trends in their business. Am I seeing a downturn in terms of my profitability? Am I seeing a downturn in my revenue? And what does that mean? And what's the timing should I actually pull back and save for a rainy day? I find that people get really excited when they see they've done their first couple of deals after spending months not spinning their wheels, but they finally see some profit in terms of what they're doing, and they immediately want to spend it, or they want
Right.
to reinvest it in the next deal, or they want to do this, that, and the other thing is planning is everything. And I always say failing to plan is planning to fail. You're always looking forward. What is at the beginning of the year, one of the things that I always like to talk with people about is setting up your list of goals for the year. How many land deals do I want to sell? And if I bring in X amount, when do I need to start bringing in people? That's why people do budgets. It's just a planning tool. to say that, look, I want to invest in this much. I want to invest in land. When do I bring people on? And it just, one thing that I can tell you with 100% certainty, forecasting and budgeting, you will always be 100% wrong. The thing is that you don't want to be that wrong. And if you see your trend versus your budget or your forecast is not going the right way, the good news is it's at least an indicator that maybe I need to pull back because I need to save. Because what I see people is they think that the gravy train is going to last forever and things are always changing in the market, right? That we just don't expect. And so as much as, you can put away for a rainy day and plan for your rainy day fund or something is not going to go right, I always say that, yes, I see people making mistakes and planning because they don't have enough put away to make the right decisions without stress, without strategically planning, without thinking about, okay, I'm not seeing a good trend here. What do I need to do in the near term to make sure that we can ride it through a recession, we can ride through a difficult time, and we'll still be in business a year from now?
Yeah, that's a really good point. I think that you just mentioned something that almost everyone who is in the land industry has experienced, including myself, that you do a deal and it's a nice size deal and you're like, "Oh, this is amazing and it's going to last forever." You ask me about what's the future of the business look like? As soon as I close a deal, I'm going to tell you, "Oh, it's great." But I think that's a really good point in terms of once you do start getting some of those larger injections of cash, that's the time to start inserting that thought of, okay, let's plan from this. Let's plan from this sort of state of mind. That way we don't have to worry about getting too low in the future. So I think that's a really good point.
I always tell people it's counterintuitive. So whenever you think, typically, when do people spend more, right? When they're making a lot of money, right?
Sure, sure.
And while I agree, we all want to enjoy the fruits of our labor and the great work that we're doing to increase the value and size of our business, we want to be tempered in that and always think we're not going to spend whatever we make if we don't have to. We'll spend a little bit more, but some of that we need to put away because we're just not going to, it may not last forever. And when things are going well, that's when you have to think not to be Chicken Little here and the sky is falling, because I want everyone to enjoy themselves because that's why we do it, but always thinking about putting enough away just in case something happens. And then you find you'll say to yourself at the end of the day, wow, I'm really glad that I planned for this because I didn't expect this to happen, but now I'll live to fight another day and the business will survive. Because all of these people that were involved in the downturn, in the real estate downturn in 2008, 2007, who did who made the most money out of that when people were making so much money and money was so easy to come by, but the market fell through. And not to say that it's going to happen again like that. The folks that really made a lot of money coming out of that were the folks that had a lot of cash and planned.
Yeah, that's a great example. Great example. Love that. If you were to say anything to maybe a brand new startup in the land space that they've just now made the transition from being what my friend Logan Fulmer calls a deal shop of just doing whatever you can to get a deal, and now they're building out systems, they're building out processes to have a legitimate business. What are some of those maybe top two or three financial questions that those land business owners and operators can be asking themselves at a pretty regular interval to make sure that they have a good grip on what's happening in their business? Don't have a ton of experience. Maybe they don't have a fractional CFO yet, but what things should they be asking themselves and looking at to make sure that they're on the right track?
They are going to be so preoccupied with finding deals and doing all of that stuff.
Yeah.
Hire a bookkeeper as soon as possible. That's what because those are the folks that are going to keep you honest and make sure that you're reviewing that and you actually ask the right questions and understanding what you're looking at. Because if they're not helping you understand what you're looking at, ask lots of questions. There are no dumb questions when it comes to the financials. Okay. It's your business. You shouldn't be afraid to ask those questions. Ask all the questions that you need to, just so that you have a good understanding of how many deals does this include and what deals were included in these sales and what expenses go into it and what does my bottom line look like and how come my cash flow doesn't match my how come my cash flow at the end of the month doesn't match my net income? What is happening here? Am I paying off a loan that's not in my P&L, that's principal, that's on my balance sheet? Ask
Mm,
questions. There's no bad questions. And the more and more you understand about what you're looking at, the better off you're going to be because you're going to know the right questions to ask.
really good. And so if
Get
someone's
someone
looking,
immediately, get someone immediately to help you keep score.
yeah, so if someone is, okay, I'm listening to this, Larry, and I'm taking your advice today, I am starting my search for a bookkeeper. I don't have one yet. I'm starting one. Exactly what are some good indicators of a really quality bookkeeper? What should we be looking for in a bookkeeper that is going to fit the need of what we have?
Don't find somebody that is a first timer doing this. Find somebody with some experience that is they actually have a really good book of business. And the other thing too is once you find someone, absolutely do ask for their list of clients and say, give me a list of clients, give me a list of 10, and I'm going to pick the five that I want to call, as opposed to the ones that you're telling me to call because you don't know how real they may be or not. Give me the ones that I want to just give me a list, give me their numbers, and maybe give them all a heads up that I might call them because that's the right thing to do. And just ask them direct questions. Were you satisfied with what you got from them? How was the accuracy of what they provided? Did they provide it timely? Did they do it when they said they were going to do it? Or are they always late? Because one of the things that I have found is if someone says they can do financials, but they're coming in 5 to 10 to 15 days late every month, if they're doing them monthly, the information's stale and you can't make any decisions. It needs to be timely enough. So people ask me, given the complexity of what we're doing, when should I expect my financials? Usually 15 to 20 days after the end of each month. And what they should be doing is sitting down with you and explaining them to you and what the meaning is. And if they're not doing their job, they shouldn't be just throwing them at you and not understanding what they're providing. They should be able to provide you the guidance that this is what they see. This is what happened during the month. They may not have advice on what you need to do from a business perspective, but they can at least tell you where you've been so that you have a good understanding of what the numbers mean. Because without
Mm,
a good understanding of what the numbers mean, how can you head your business forward?
absolutely. Now that's
It's all the
real.
map. It's the map theory, right? Is I want to get from Austin to Dallas, okay? But I don't have a map. And you can only get there with your map, right? Whether that's an electronic map or a paper map, without having the road map, you're not going to be able to get from point A to point B. You've never been there before.
Yeah, absolutely. Oh, that's so good. That's so good. Larry, I want to thank you so much for being so generous with your time today and your information. I know my head is just spinning with so many great opportunities and potential directions for the financial health of my businesses. But what are you looking for right now? What connections or resources we can give back to you?
I probably wouldn't be good for someone that is probably just starting out. Probably not good for me to be with them because literally at that point I'm probably too expensive and I'd rather have them save their money to do deals or find someone like a bookkeeper to just get them started to at least give them an idea of this is where I stand, and it also allows them to free up their time to actually create the business and create the deals because that's what you want to be doing. You can always make corrections later. You can always understand things later. But if you're the marketing person behind your business and you're working on all your lead gen and your sales and your closing, because maybe you're just not big enough to have all of those different types of people doing what you're doing, spend time on building your business and creating revenue. The expense piece, we can always work on the back end to figure out how to become more efficient. But without sales, there's nothing. And so that's what I would recommend for me. Probably someone that's been in business at least a year or two and understands really what they're doing and really says, all right, my business is plateaued or I'm not as profitable as I should be. Can you help me take a look at the health of my business and maybe put things in a different way and maybe help me understand the health of my business better than what I'm getting right now? That's probably a good time for me to start getting involved.
Excellent. And so if someone wants to reach out to you to talk about this and potentially work with you, how can they do that? How can they reach out to you?
Best way to do it is via my email address, Larry, Larry, dot white as in the color at LKW Consulting.com. I also have a website, www.lkwconsulting.com. And it really gives you an idea of this is my theory, this is how I look at things, this is how I help people. I have a process that I go through with people to determine how can I best service them. And I put them
Excellent.
in the I put them in the best possible way. The most important thing for me is that they understand their numbers and are able to do something with them so that they can take their business to the next level.
Love that. Love that. So we'll also put your contact information and your website in the show notes. Thanks so much, Larry. Thank you. This has been an absolute pleasure. I know that this is such an important topic, especially when you're talking about growing your business. And it's really not one that very many people talk about as I think as cogently as you did today. So thank you so much for sharing your information with us. And I know I personally look forward to working with you in the future. So reach out to Larry if you're interested in getting your clean bill of health financially for your company. And thank you so much for joining us, Larry. Again, it's been an absolute pleasure.
Thank you, Kendall, for having me, and thanks for everyone who's on the podcast. And also, if you just have a question, feel free to reach out. Kendall will provide the email address and all that kind of stuff. I'm happy to answer whatever questions that you have.
So generous of you. Thank you so much, Larry. Everyone, I hope you have a fantastic week. We will catch you soon. Until then, be safe, take care, and we'll catch you in the next one. Bye-bye. If you're interested in hearing from other seven-figure land flippers about how they've started and run their businesses, then join us at onlylandfans.com. Looking forward to seeing you there.